A wave of anticipation rolls over the financial world as investors prepare for significant happenings on the economic calendar, including the Federal Reserve meeting, non-farm payrolls data, corporate earnings updates, the Bank of England meeting, and Eurozone inflation and GDP data. Speculation is rife regarding the Federal Reserve's upcoming policy meeting on Wednesday. Most expect the Fed to maintain current interest rate levels after Chair Jerome Powell hinted at a reduced need for further hikes considering the rising long-term yields. However, a handful of investors are placing their bets on a possible rise when the central bank convenes in December. Current yields, at a staggering 15-year high, have spurred a sell-off in the S&P 500, forcing it down by over 10%, although it still displays a nearly 8% increase for the year. The non-farm payrolls data release on Friday promises to shed light on the state of the U.S. labor market. Although economists project an increase of 182,000 jobs, milder growth compared to the impressive 336,000 jobs added in September, it still signifies a sturdy labor market. The unemployment rate is anticipated to remain low at 3.8%, while wage growth could potentially ease to a post-pandemic low of 4% annually, solidifying the Fed's stance that rate hikes may be unnecessary due to waning price pressures. The corporate world holds its breath as Apple, leading in market value, is due to present its earnings report this Thursday. The third quarter earnings season has already seen some disappointments from notable tech giants like Alphabet and Tesla, provoking a downtrend of the tech-loaded Nasdaq 100 index by 11% from its peak, despite an almost 30% surge this year. The Bank of England is set to gather for its penultimate meeting of the year this coming Thursday. Despite a string of 14 consecutive hikes, there's a widespread expectation that the Bank of England will maintain its rates at a 15-year high of 5.25%. Policymakers may highlight that despite evident economic stagnation, the rates will likely remain steady for a considerable period. Last but not least, the European Central Bank, ECB, has held rates following a history-making hike series and is now looking ahead to the release of inflation and GDP data on Tuesday. Preliminary consumer price inflation figures are forecasted to slow to 3.2% in October, edging closer to the ECB's 2% target. Yet, GDP data could reveal a 0.1% contraction in the third quarter for the Eurozone, signifying a mere annual growth rate of 0.2%. This is the stock price prediction and recommended buy price for Theta 45 traders of Apple Incorporated for October 30, 2023. Over the last 64 trading days, Apple has been trending at a daily rate of minus 0.24%, and within a daily volatility range between minus 2.95% and 2.55%. On October 30th, Apple is predicted to close between $166.67 and $168.98, with a probability of 37.5%. There is a 75.0% probability that Apple will close between $165.53 and $170.15. The recommended price to buy Apple for inter- and intra-day traders on October 30th is $164.39.
Do you want to generate your own Theta 45 forecasts? Then, go to textbuddy.ai. The only place where Theta 45 meets ChatGPT. Simply enter the ticker symbol and then click on either today's or the next day's forecast. TextBuddy.ai takes a few moments to analyze the Theta 45 report and write a complete real-time stock price forecast. Go to TextBuddy.ai now and register to get 10 free credits every day. That's 10 Theta 45 forecast reports every day for free. If you need more credits, use the discount code Theta45 to get 10% off.
Subscribe and press that notification bell so you don't miss any forecasts from Theta 45. Or, download Theta 45 on your mobile device and try our free demo.